So what has all this stimulus and 0% interest rates led to? The capital markets casino. Equity market valuations have exploded. As you recall, last year I had the most prevailing thing that people would ask me is, how can the equity markets be rising when the economy is getting crashed? And it was one simple reason. Look at what the Federal Reserve was doing. The more money they pump into the system, the more it's going to rise asset values. Because again, what does the Fed do when they expand their balance sheet? They buy mortgage-backed securities, they buy treasuries off the balance sheets of banks, insurance companies, investment banks, pension plans. They take that on their balance sheet. What do they send back? They send back cash. What does that cash do? That cash goes looking for a home to generate a return. And so money flooded into the equity markets and into the bond markets. So after last year's big returns, now we have the equity markets up, the Dow up 18%, NASDAQ up 21% this year, and the S&P 500 up 23%. Interesting, I show you the different sectors and how they've performed. If you recall from last year, the worst performing sector last year was energy. Remember when energy prices went negative last year because they didn't even know what they could do with the oil? Financials were the second worst performer. Now, what are the two best performers? Energy and financials. Technology and infotech, which had huge years last year, still had a pretty good year this year. Infotech up 24.47. Real estate was the third best performer. REITs got hit, but not as bad as financials and energy last year.